Good evening, ladies and gentlemen. Welcome back to just what an insane week of the stock market. I'm glad that many of you are taking the Sunday night off to join me to discuss, the passing of Charlie Munger. We've got some details, some videos that I just want to share surrounding that. We got to talk about the insanity and how much the Cybertruck has changed since its release and what that kind of means for Tesla stock, the Tesla bulls. We'll compare it to some of the other electric vehicle trucks that are currently coming to market when it comes to like the Silverado with GM. We'll talk about Ford's the Ford Lightning and just do some comparables on that. And we got to dive into the battle between Elon Musk's Twitter, what could be the end of Twitter. If there was ever a sign to diversify your social media accounts, this should best be the sign. The insanity that was going on there. We'll recap some of that. It kind of reminds me of Omegle. I mean, I used to watch some of the Omegle streamer guys that went super viral, and that just disappeared overnight. So I think people, I might be taking Twitter for granted here at the days that might be numbered. And then we got to talk about the Canadian bank earnings. There's so much going on this week. It was just an astounding week of, needless to say, nothing boring. What's the next bubble sector that we can front run like the wheat stocks? We're a little ways from that. This guy's calling it tech, but let's get into it first and foremost. I just want to highlight Charlie Munger, right? I mean, if you grew up investing at some point or another, you took it very seriously. You've come across these moguls, and I think it's just fun just kind of quoting some of these and just taking a look at a few video clips that are just very intriguing. Charlie Munger's number one tip for living a long, happy life was avoid crazy at all costs. And I think Warren Buffett had a better quote in tandem to it, basically saying, my partner Charlie says there's only three ways a smart person can go broke: liquors, ladies, and leverage, which hold true to this day. And I got to admit, crazy, it is easy to go down the path of crazy. I'm sure you've all met crazy people. There's people that I will not hang out with because I've seen how their nights end, and when you hang out with people like that for too long, where that goes for you. But still, let's just take a little bit of a video clip. I found this one, and then I'll share with you one that you should really watch. There's a channel out there that did a great job breaking down his history, but I'll kind of speed through this just to give you some anecdotes, but this is great.
Of continuous savings, the power of compounding, the American tailwind, and avoidance of major mistakes. You have humbly admitted in the past that you have made many mistakes, but this is the first time that major mistakes stood out to me. Could you please advise us on what major mistakes we should avoid in both investing and in life? I would also like to have Mr. Munger's thoughts too, please. Thank you very much.
This is pretty
good. Charlie said the major mistake you can make, then you're lucky if you're in the United States. If you go around the world, you don't have a lot of choices in some places, but you should write your obituary and then try and figure out how to live up to it. That's something you get wiser on as you go along. The business mistakes, you just want to make sure you don't make any mistakes that take you out of the game or come close to taking you out of your game. You should never have a night when you're worried about investing. I mean, assuming you have any money to invest at all, and you should spend a little bit less than you earn, and you can spend a little bit more than you earn, and then you've got debt, and the chances are you'll never get out of debt. I'll make an exception in terms of a mortgage on your house, but
this is literally like Dave Ramsey's advice. It's crazy how like the synergies between most like mogul investors, it never really changes. It's just always the same mantra, and people like to over exuberate it into like leveraging. Like I remember Andre Gide, and I'll never forget this. He's like, everyone that became really rich put all their money into like one thing, and he was just like over leveraged into crypto. Crypto's coming back though. I mean, maybe he's making his money back, but this advice is so tried and true.
Credit card debt, we're in the credit card business big time, and the world will stay in the credit card business, but why get behind the game? And if you're effectively paying 12 or 14 or whatever percent you're paying on a credit card, you're saying I'm going to earn more than 12 or 14% of money. And if you can do that, come to Berkshire Hathaway. So it's I hate to say this when Charlie's around me, but it's straight out of Ben Franklin. I mean, and it's not that complicated, but
this is the part.
Well, I'll give you a couple lessons. Tom Murphy, the first time I met him, said two things to me. He said, always tell someone to go to hell tomorrow. Well, that was great advice then. And think of what great advice it is when you sit down at a computer and screw your life up forever by telling somebody to go to hell or something else.
This is so great because this is literally the issues that Elon's dealing with on Twitter. It's like today is a little different to tell someone to go to hell. It's
30 seconds and you can't erase it. And you haven't lost the option. And he said, praise by name, criticize by category. Well, what makes more sense than that? I mean, who do you like that criticizes you all the time? And you don't need to vilify anybody to make your point on subjects of discussion. And then they give you another general piece of advice. I've never known anybody that was basically kind that died without friends. And I've known plenty of people with money that have died without friends, including their family. And but I've never known anybody. I've seen a few people, including Tom Murphy Sr. and maybe Jr., who's here, but certainly his dad. I never saw him. I watched him for 50 years. I never saw him do an unkind act. I didn't do very many stupid acts either. I mean, it wasn't that he was non-discriminating. He just decided that there was no reason to do it. And wow, what a difference that makes in life. Charlie?
Well, it's so simple to spend less than you earn and invest shrewdly and avoid toxic people and toxic activities and try and keep learning all your life, et cetera, and do a lot of deferred gratification because you prefer life that way. And if you do all those things, you are almost certain to succeed. And if you don't, you're going to need a lot of luck. And you don't want to need a lot of luck. You want to go into a game where you're very likely to win without having any unusual luck.
This is such a good quote too, right? Because I mean, so many people just don't understand the whole idea of frugality. We were just talking in our chat group because somebody hit 100K for the first time, and it just came back to that point of like, once you get to that first 100K, the second comes pretty easy because you've kind of adopted the habits that are required, and the million is going to be inevitable because those habits that have formed to get you to that first 100K, right? But the thing is if you want to make billions or hundreds of millions, I mean, you're going to have to form some habits that go well beyond, I think, just investing. I mean, you're going to have some real business savviness going on. And don't worry, we're going to talk about this bull trap Christmas rally that's going on here very soon. But yeah, it's been a pretty resilient week. And I do recommend going into this video that was done by New Money. He did a great job breaking down the lessons from Charlie Munger going back to the Great Depression. And he said there was, I think his dad was a lawyer, but a very stern guy. But he said your only job outside of your family is to basically, do everything you can to get rid of your own ignorance. Learn enough to not be ignorant is like your second most highest moral duty to your family. It's like, man, this guy's OG. And I'm really curious to see how this is all going to affect, because the inevitability is coming with Warren Buffett too. I mean, hopefully we get some more gracious years out of the guy at these annual shareholder meetings. But I mean, the fact is can Berkshire really function to the same, fortitude that it has over these decades without those two guys? Because you got to imagine that Warren Buffett and Charlie Munger still are primary decision makers for some of the major holdings within the company, especially with Apple and all that stuff. So I'm just really curious to see if all the other managers are going to kind of come through. And as mentioned before, I think there's big risk with this because they don't really shine the light on the other managers that are going to be kind of replacing these two, and we don't even really know much outside of Ted and Todd and the other managers. So I'm hoping as these new shareholder meetings come through, we'll shine some lighting and start passing the torch so we can get familiar with people that are going to be taking over the company. But at this point, I think we should rest in peace to your good soul, Charlie Munger. The lessons will long live through the echoes of my investing career. But I guess we could talk about the epic catastrophe to some extent that was the Cybertruck release, because oh my god, my buddy has on pre-order pretty early on and he canceled. I know about another dozen people that have canceled. I'm sure there's going to be a ton of people lined up to buy this thing. I'm really curious to what the end reservation numbers are going to look like, but this came in way beyond what people were expecting, and you can't really blame them as much because of the inflation. This was 2019 when the market was still good. Now things have gotten out of control, but I'll show you some comparables because just the important things on the lower end model, we're not going to really compare the higher models because at the end of the day, the base model, and we're not talking about adding self-driving and all this other stuff, but for $61,000 or $60,990, you're only getting 250 miles of range, which is just abysmal. Like that's so low. And I don't really care about like the 0 to 60 in 6 seconds. 7,500 pounds of towing is great. Most of the statistics for a truck were pretty amazing. It was just a matter of the price you're paying for the lack of miles you're getting. Because if you go back in time, you might recall the cheap model was only supposed to be 39,900, and that was supposed to be 250 plus miles. And yeah, we're a long ways from that in the 2019 days. I mean, the highest end model was supposed to be 69,000. And that was supposed to have 500 miles plus range. And even the top model now doesn't even have 500 miles of range. So, I mean, we're definitely missing a lot on that aspect of it. Sorry, I'm just share screening that just so you guys can see the numbers here, when they actually showed these in 2019. So again, 39,900. Our new base model is the most expensive model that was projected in 2019. What 4 or 5 years difference can it make? But incomparable, I think a lot of people aren't doing like the right comparisons here, because as much as people are complaining about it as well, you got to remember, like, you can tell they're really competing with the low end like F-150, because the F-150, like the low end is 61,000, so they're beating the price. The estimated range is 386 kilometers. Converting to miles, it's about 240, so they're barely beating the estimated range of the Ford Lightning's base model, and the towing capacity is coming roughly in line. I think the Tesla's at 7,500 pounds. This goes from 5,000 to 7,700. Not really sure what the variables would come into play with that. And then there's also kind of competition going on with the batteries, because Tesla being a dominator in batteries, you've also got the Silverado that isn't coming out yet, but that's supposed to be promised at 400 miles of range, and we don't really have a price target on this one quite just yet. So if this comes out, it'll probably be one of the better with range, but who the heck knows? And it's also supposed to have 10,000 pounds of towing, and it's actually supposed to do better from 0 to 60. So I'm very intrigued to see how GM does with their truck. But what I really listen to is not my own opinion on this. I think it's important to, I just keep your ear out for people that are very in the tech and know how, like the inside, the What's Inside family did a great job. I'll show you a few clips from this because they offered some really good insight from people that are like way more into this than I ever would.
Only 320 miles. That really made me angry. I was not happy about it. Now, if you're just going to be driving it around town, I get it. But if you're at 340 miles range, I know from having many years of Teslas, after a year or two, that's going to drop down to 300, maybe like 295. Which isn't fantastic for road trips. I really loved listening to the presentation. It was so funny. Elon has a great sense of humor. But dang it, I really wanted a road warrior truck, like 500 miles range. Tesla's 4680s are supposed to be the best batteries in the class. How do we not have more than 340 miles range? Not everything can be what they dream up at the beginning, but it feels like a massive miss when you've got the Chevy Silverado EV at 450 miles range, almost 500. I wanted Tesla to be the leader in battery technology, because it seems like they should be with their manufacturing processes that they have. Well, one of the things that they did not talk about was there is a range extender that you can purchase. Really smart people have looked at the coding of the Tesla website. The range extender is going to be a battery pack that takes up a third of the truck bed, but it gives you around 130 miles more range for only $16,000. So this is one of the specs that really changed my perspective on the Tesla Cybertruck and made me a little bit more excited. That would give me a vehicle that gets over 450 miles of range, which is something that I really, really want from a Tesla. And if I can get rid of the all-terrain tires, I don't know how good it's going to look on the vehicle if I do this, but if I could get some better road trip wheels on there, maybe I could even get more range, maybe an extra 10 to 30 miles out of that. We could be pushing close to that 500-mile range. It's possible. I feel like it's possible. Zach, gut reaction after seeing the presentation?
A lot of words going through my mind, but it's just like I was expecting so much more and got so little. It is immensely disappointing what we received today after waiting 4 years for it. I'll collect my thoughts, but I am very disappointed. I was expecting more.
You have a Rivian truck right now.
I have a Rivian.
Is there anything that tells you today that you would want to switch from a Rivian to a Cybertruck?
0% switch. Personally, I don't care about the bulletproof side of things, and I'm not willing to spend more to get that feature. I'm going to collect my thoughts.
Yeah.
It's kind of crazy, really, because people that are heavy in the tech, like they're just, it was quite a letdown. So like I said, Tesla bulls out there. And like I've been saying, I am a long-term bull on Tesla, but people really got to kind of tame their expectations and stop listening to like influencer bulls on Tesla. Like I've been playing both sides of the fence here, but sometimes you got to like settle your reality and realize like a $1,500 price target by like 2025, 2026 seems a little bit ridiculous at the pace of the innovation here. It's coming a little bit slower than I think people wanted to. And this is just hitting Elon Musk from like every angle right now. Like this dude is just struggling, man. If you didn't see this, you be missing out, baby, because this is like the true end of Twitter. Like I feel like Twitter is on the cusp of just being no more. I feel like Elon would rather it go to zero than pander to these billion-dollar companies like Disney. Like, he called Disney out, baby. And Disney is doing everything they can to take the drama. It's so funny.
You hope
Don't advertise.
you don't want them to advertise?
No.
What do you mean?
If somebody's going to try to blackmail me with advertising, blackmail me with money, go f yourself.
But
Go f yourself. Is that clear?
Calls out Bob.
I hope it is. Hey, Bob, if you're in the audience.
I just love this because, like, it really shows you the raw struggles of like managing these big social media accounts. Like I said, it really hit home hard because I watched so many influencers from Omegle. I mean, there were so many funny creators on Omegle, and it was such a unique platform, and they struggled so hard. And when they just disappeared one day, like, I'm glad a lot of those influencers were able to migrate to YouTube, and it really shows you the resilience of companies like Facebook and Google. I mean, it is really, really hard to compete in the social media space. And I think in time, it is going to continue to kind of degrade down to like a few mega brands within like the social media space, because, you know, it's just clearly not as easy as just setting something up and letting it run. And we're starting to see it more and more, you know, every day. We'll see how TikTok kind of plays into a lot of this. But I also thought it was funny because, like, you know, I think I have the clip of it here. Do I not? What is this? Musk. Yeah, I know the advertisers, blah, 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 blah. I think there were some quotes in here I was going to share, but I kind of just want to talk about Disney stock, because Disney stock, it sputtered a little bit during this kind of drama. But what I think is most interesting is after the South Park scandal and stuff, when, you know, South Park just eviscerated Disney's like current content creation, you know, Bob, you know, is kind of flipping around here saying that, you know, basically they're calling creators to focus on entertainment and not political messages anymore. And they said that they've been kind of, you know, pandering a little bit to like the political rhetoric that's been going on. Is we have entertained with values and having a positive impact on the world for many different ways. I've used, you know, Black Panther 2018 is a great example of, you know, just that in terms of, you know, fostering acceptance. Iger explained, but primarily the goal is to entertain, since, you know, taking over about a year ago as head of the company, which was losing momentum after a brief retirement in 2021. Iger says he wants to return to our roots. And I don't really know what that means. It seems like it's, I think, a really good example. I think that did really well was like the Mario movie. I really felt like the Mario movie was just a great piece of content where it wasn't really pandering to any politics. It was just a very kind of clean, just simple story, and it kind of lived up to you know, the hope. A lot of people thought it was underwhelming. I thought it was pretty reasonable, and it wasn't like a lot of the Disney movies we're seeing today. Yeah, I know it's going to be a sad day if Twitter goes down. A lot of people rely on it, and there was also a lot of talk too about a lot of the big news media that was getting crushed because they brought it up in that interview too, right? That, you know, a lot of media companies were using Twitter to post their news, and now Elon's making them pay like $1,000 a month or something ridiculous to basically kind of keep the same stuff going. And yeah, it's ruined a lot of companies. Like, you know, I really think Twitter's on the cusp of, you know, its end here. And if Elon going off the rails and all this Disney stuff isn't like a true sign of it, I mean, it could be, you know, the darkest before the dawn, and maybe it does turn around and become this great platform. But in the meantime, if you are using Twitter as a primary platform, you really, really need to diversify, you know, your social medias, because whew, baby, what a rough world we're living in. But putting that aside, I mean, I don't know how many of you use Twitter. I don't use it as often. I kind of just use it to read Elon's tweet and a few people's that I follow, like, so just to catch up on some tweets here and there, but I don't really use it that much. Disney is also going to start paying dividends again. And did they mention they're going to start paying dividends? As mentioned, I think Disney is a terrible company to own. I know people love it, but as I said, it's a very cyclical business. And now that they're in streaming, one of the most competitive businesses on the planet, where you've got to keep people's attention, and every day it turns over, and you ruin brands like Star Wars because you have to regurgitate content like there's no tomorrow. I mean, it's going to be a rough future ahead, I think, for Disney outside of their parks, which they doubled down on their park investments because obviously that's where the money's going to be. But streaming, you know, Apple, everyone's playing in it. And I still think YouTube has the primary dominance over the future of media when it comes to that business model of just printing. Isn't Disney still losing money on every project? Yeah, pretty much. Every movie's been not a flop. Like, I think some of these Disney movies have been pretty good. It's just a matter of they're not selling at the box office. And, you know, streaming just doesn't, you know, give the same kind of return. I mean, you see it with Netflix earnings. Like, I mean, Netflix isn't like crushing it. I mean, go look at Google, right? Google has the best motive for creators. Google pays nothing for content. Creators that I watch every week continue to post content and have since I've been on YouTube. A lot of these OGs, like I'm sure many of you watched, if you were into the OG cringe YouTube, like the Boogie 2988 documentary that just blew up the internet after that guy fell off for, since like 2019. There's been so much drama and I love it. YouTube is considerably a place in my soul. I mean, I even still watch, like if you want to watch something crazy, if you guys really like, if you're OG to YouTube, if you're old like me, if you're starting to feel old, you got to go back, and watch this. I'm going to give you something to watch. I mean, it's a little bit cringy, but sure. Epic Mealtime, because Epic Mealtime doesn't even exist anymore, but you guys really need to go watch the, because if you remember OG YouTube, who was the guy that was on this podcast here? Yeah, this guy here, Kyle from AKA FPS Russia. I don't know if you guys remember OG YouTube, that where you could never really do the stuff that this guy is doing back then. Like you got to go watch FPS Russia, because this was like the first interview that he's really
your videos
in a long time. Like it's been a long time since anyone's heard from this guy, and he was on Epic Mealtime. Sorry, that's me just going on my nerdy little rant for those of you OGs that have been around too long. But I still love YouTube, man. These guys are still around. You're not going to see that on Disney. Star Wars isn't going to be around forever. It's going to be so regurgitated. So it's OG for me. They're going to pay dividends, somehow make up investors happy again. We'll see. But I'm still a tried and true, probably going to buy Google stock at some point. I really should. It's like my next to Meta. I think Meta and Google are probably like the two premier. I mean, even Google is more ahead right now in self-driving than Tesla is. Bacon, and more bacon. But anyways, from the stock side, though, I guess we could talk about what's going on in the market this week, because I've been battering bank stocks like there's no tomorrow. And I'm going to share with you a little bit of a clip here as well. This is funny. They're losing money in Star Wars for crying out loud. Yeah, it's a sad day. Epic Mealtime was hilarious. OG, man, you got to be OG to know Epic Mealtime back in its glory day. I mean, that fell off pretty hard, but it's still nice that Harley's still out there. I think he was in the boxing match, right, with iDubbbz, and even iDubbbz has fallen off a lot. I mean, OG YouTube, you got to be so old to know a lot of that stuff these days. But actually, what's really cool about YouTube as well, and I just want to say this, my brother's kids, I took them out. They're like 7-6 years old. All right. They're really young kids. And I took them to get slushies at the store, and all they wanted to do was buy Prime energy drink. And if Prime isn't a great example of like a brand new $1 billion drink brand that was primarily just built off what was a YouTube social media, it's just, sorry, I'm kind of catching up on my brain here, but I'm sure you guys have heard of Prime, right? When it comes to Logan Paul and like how big that brand is, but it's just crazy how those brands have just indoctrinated children. Because I'm like, Logan Paul isn't that big of a character to look up to. He's not like the most aspiring person on YouTube, but like kids, man, are just obsessed with Prime. It's kind of mind-boggling realistically, but still getting into bank stocks, folks. I want to share with you a couple of videos here, because banks may have found their bottom here, and I'm hoping they haven't, because I still want to continue to buy some of these to some extent, especially at the beginning of the year when I can turn it over into that tax-free savings account. But my God, if there isn't a sign that the market's trying to find a bottom when, Bank of Nova Scotia missed its earnings and just dropped 5% to only recover and go beyond that a day and a half later, I think is a real resemblance that October is always seeming to be the sign of the end of the market bottoms. But I mean, Bank of Nova Scotia isn't the best. I think most people have been paying attention to Canadian Imperial Bank, which posted some of the best numbers. And this thing skyrocketed up 20% from those lows, regaining all the losses pretty much from this year. We're still a ways off the highs. Keep in mind, like we're still buying in discount territory. But the thing is like saying, we're going to be saying goodbye to 7% dividend yields. I don't think we're going to see these again. I've been preaching from the rooftop that this is a rare opportunity that's going to, go by us here very shortly. And it seems that is the case with most of these bank stocks. TD is the one that's actually struggling the most. But what I want to do is just share with you, and we'll skim through this video. I know it's 17 minutes, but I'm probably just going to speed through it and, go from there. I know a lot of you guys are mentioning quite a few things in here, when it comes to some of these bank stocks, but just take a quick listen here.
Canwar, we are watching the bank stocks. 3 more reporting a mixed set of quarterly results. Some winners, some that are struggling this quarter. We have Royal Bank, CIBC beat profit expectations, boost their dividend, and then you have TD not only missing
a lot of dividend boosts too. We're getting a lot of dividend increases even in the next year, which is super cool. Which she'll make up for some of the gains this time around, right?
Expectations, but also announcing a pretty massive restructuring as it looks to lower its headcount. There's some common themes, however. All of these banks boosting their dividend, all of these banks continuing to struggle with expense growth, growing between 12 and 13% for Royal and CIBC, 20% for TD Bank. There's a lot to go through here. I'm not going to do it alone. We've got Paul Bagnall, who has gone through the numbers, Christine Dobby.
I just want to point out when they're talking about the expenditures, they're talking about loan loss provisions. TD, I think, is struggling the most right now because of the U.S. exposure, but primarily because they couldn't get that deal with First Horizon to close. And I think that's really wrecking their growth because they were probably heavily relying on it until the market tanked on them. And Royal Bank right now is hinging on that deal. That would be incredible for investors if they get the Canadian counterpart of HSBC. So is the mortgage exposure a big threat coming, though? So right now, I think 1 in 5 people are probably having negative amortization rates. That was an article that came out like several months ago. But in my humble opinion, are people going to be struggling with their mortgages? Yes and no. Like the default rates are steadily going up. Like there are people that are being hindered, but those default rates are heavily, really only impacted by the asset value. So if real estate prices do not collapse, and they have collapsed in areas, there's been places where real estate's corrected up to 30%. I've seen it, but in the main metropolis areas where like Toronto, where real estate is still going up in value, bringing up the broader, entire Canadian value of real estate in these major metropolitan areas, if I can say that right, which basically just means that if you default on the loan that you have to the bank is going to foreclose on you and then force your house into sale, at which they'll take the money you owe them and then obviously pay you out the difference. That's usually what happens. The same thing can happen if you don't pay your property taxes. Within 2 years, I went back in my entertainment days. I used to perform at the conferences for a tax recovery team, and their entire job was to basically go and sell houses and just kind of basically sell homes for tax recovery. And he told me that if you don't pay your property taxes within 2 years, the government has every right to take your home, which is crazy. And then they'll just put it up for sale and take the money you owe them. The government is always in your back pocket when you own real estate. But if that real estate does not collapse, it doesn't really matter because that mortgage is still secured. It's still within a secured value. What gets scary is if you buy a house for $1 million and it drops to $500,000 and then you default because interest rates are so high. That would royally screw the banks. But as it stands in this moment, we're really not in that kind of market environment.
He has listened to the conference calls we've had so far, and a shareholder in these banks in Paul Harris, part of Harris Douglas Asset Management. Paul, I'd like to start with you, kind of the high-level takeaways that we have seen from these banks this morning.
Well, let's start with TD Bank. It's clearly the outlier here. As you can see in early trading, investors are selling the stock down. This is the bank that missed earnings expectations, but there's more to it than that in terms of negative news for TD Bank. It had a weak quarter in the United States. As we take a look at the earnings miss, it also, while it certainly did not issue a profit warning, it did say that it will be challenged to meet the financial growth targets and return on equity targets that it has earlier set for itself. So here are some of the takeaways, Amber. It was an earnings miss. Provisions for credit losses rose from the third quarter to the fourth quarter.
Actually, CM was the only bank that didn't raise credit loss provisions from last quarter.
And it says it will be challenging to meet its 2024 targets on earnings per share growth and return on equity. Profit was down in Canada and down in a big way in the United States. Profit in the United States on an adjusted basis declines by 19% at TD Bank. The bank blames higher non-interest expenses, so higher expenses, as you noted, higher provisions for credit losses, and lower revenue. Not a great combination of negative factors in the U.S. The bank, after all of that, did raise its dividend. Here's a quick.
That's what I love. It's like these banks have been like what's the term, oligopoly or whatever, basically government controlled entities that are monopolistic because there's like a handful of them that control the entire market, and their payout ratios are so low that even against the backdrop of their earnings dropping this much, their payout ratios are still like in the 50 percentile range, and they're still able to increase them. And this just is a proven defined factor that these banks have survived every terrible market environment, continue to increase dividends. I mean, they're so damn resilient. It's just kind of mind-boggling because this is going to come to an end. It is going to come to an end, whether people want to believe it or not. And these opportunities that persist can only be here for so long before the market environment stabilizes.
Look at RBC. RBC has topped earnings per share with earnings per share of $2.78. Like TD, it did dial up its provisions for credit losses from the third quarter to the fourth quarter. Like TD and CIBC, it did raise its dividend, but profit growth very difficult for these banks to come to achieve in their core personal and commercial retail banking franchises. It sagged by 2% at Royal Bank of Canada. As you noted, the strength was in the capital market segment, which often gets viewed as a less high quality source of earnings growth. And finally, CIBC also beats earnings expectations with $1.57 in earnings per share. Of the 4 big banks that have reported thus far, this is the only one that dialed back somewhat, not by a huge amount, but dialed back its provisions for credit losses from the third quarter to the fourth quarter. And the profit again, no profit growth in personal and commercial banking for CIBC. It was essentially flat. It declined very, very modestly, and there was a dividend increase. So some good news for investors of all 3 banks today.
All right, that was a fabulous setup.
Yeah, and we did talk about some stuff. They get into a lot of details here. I mean, you can go check this video if you want to learn a little bit more. But honestly, all in all, we're just getting a bunch of dividend increases. If you hold like an equal weight bank ETF, you're crushing it on the returns, because even the bad earnings are good earnings outside of TD, which is just sputtering to the flat line here. But even still, like the amount of dividend increases we're getting as Canadians next year is insane. I think every major company is increasing dividends, from like Enbridge to all the banks. So I'm very intrigued to see what VDY's dividend history is going to look like here, coming into next year, because even in this backdrop, you're getting a crazy starting yield. It's just wild that you can get these like 5 to 7% yields. And then on top of that, you're getting increases into next year. Like you're just about getting a full market rate of return right now, just from the dividends, which is, it's a rarity. It's never in their history where we've seen a market environment like this. Oh, at least, like I said, I've shown you guys the backtracked history on this. It's been like 20 years. Again, let's use BNS as the example here. If you just look up BNS dividend history here, I mean, I've done this so many times for most of you. I'm sure you're used to seeing this, but it still just boggles my mind. I need it from Macro Trends, though, because Macro does a better job at backdating the data for me. But I mean, when you look at this, I mean, outside of the pandemic, this is the highest yield in its history, going back for its entire, the last time it was paying anywhere near 6% was 2005, coming out of the crazy .com era. But I mean, look at this. This has never existed. I don't think people understand how beautiful this really is. It's like such a rarity. So take advantage of what you can. Yeah, VDY is a gift that keeps on giving. I agree. My parents are into the retirement phase, and VDY is a proponent, but I think now is the opportunity. That's such a great time to be buying these Canadian dividend ETFs. It's just a one pocket fits all great Canadian dividend way to the economy, because I don't know about tech. Tech still scares me a bit. And again, we have our exposure to tech, but tech is just, in this market, it's hard to understand how expensive it is. Because I mean, when again you look at something like Microsoft, these tech companies are trading at crazy high multiples that they just don't have the same growth they did literally in 2019. So how are they trading at a higher PE than where they were in 2019? So I think there could be some consolidation into the end of this year with those kind of companies. But this comes back to the point of companies like SCHD, right? Or like these ETFs that basket these really cheap stocks. I really think we're going to start seeing a recovery in a lot of these, especially once we sniff out those interest rate cuts. That's when these things will really shine. But even still, I think we're very likely to continue to see a recovery, because they just got too oversold for the most part. Again, I wouldn't mind starting to cost average into the Qs. It'd be nice to see a pullback here. I don't know if we're going to get it, but outside of that, the only value that I do see today, and it used to be Meta, but now it's Google stock. I don't think there is a better tech company right now than Google for the price to earnings of 25, plus the growth I think that they're still going to be able to experience in the future. It's one of those few tech companies that hasn't hit all-time highs. I also like the e-commerce space still. I do like Amazon. I think Amazon is still an intriguing stock here with the growth that's going on, in just e-commerce. And this Christmas is a true resemblance of that. For those of you that did Black Friday shopping, I mean, most people did it online, and there were records across the board. And I don't think those records maybe truly show how bad the economy is. I just think, because I wish you could take like the total sales of everything for Black Friday and compare it year over year, but I think it's very hard. But online, you can just see like, these record sales. It's like, well, maybe not record in total. It might be slower than last year, but it's definitely picking up all the steam online because no one's going into stores to shop like they used to. BNS took 1.3 billion in credit losses, and dropped Canadian Tire, basically at a loss. So the credit loss they took, the CEO kind of gave a little bit of a pump there. They were saying that basically they just wanted to write down as much credit losses for this quarter as possible so they could start pulling them back next quarter. So they're just trying to jump the gun, I think, was the idea behind that. I want to buy BNS, but already have a lot of shares. Don't want to have too big of a position. That's a scary thing too, right? Kind of get caught in what I would define as a different kind of yield trap where it keeps going down and you want to keep buying, but you're over concentrating. That's another risk that comes into play. Tax question for you. You guys, I maxed out my RSP and TFSA. Should I use a taxable account for CAD stocks now? for the tax credit and keep the S&P 500 in a registered accounts. That's pretty debatable. I know a lot of people, I don't know. That's a hard one to state because with the dividends, honestly, buying any growth stock in a regular tax account is the most tax efficient thing you can do because on US, or let me just collectivize this and just explain this so you understand it. So when it comes to capital gains in Canada, you're only taxed on 50% of them. So that means half the capital gains you make are 100% tax free. And it doesn't matter if you own US stocks or Canadian stocks, there is no withholding tax on capital gains. So in the perspective of like the most tax efficient way to hold stocks, you're better off owning companies like Google or Berkshire Hathaway or companies that don't pay dividends in a regular brokerage account that are going to optimize the most growth into the future, the most capital return from the stock price. So you can actualize it when you're in a lower tax bracket, because when you're in a lower tax bracket, take the capital gains and pay the regular income tax on the 50% of the gains that you made, but do it in a way you have control over it, right? That's probably the most efficient thing to do, because with the Canadian stocks, so long as the Canadian stocks are making 50% of their income in Canada, I think you get like a minimum tax rate, and I think it's like 15% or something. Like, it's really low, which is fine, but the problem is you're paying it no matter what because you're getting paid out. So in my opinion, I would rather hold like the S&P 500, but the problem is you're still collecting dividends off the S&P. So you could buy DFE maybe if you want to just get a bit of dividends, but they're probably better off, in your tax advantaged account, and try and focus on stocks that don't pay any dividends. If you just want to be like down to the wire, as finicky and as in control and like optimized as possible, that's the way I would do it. But you don't have to do it that way. I mean, you're talking about like, that's just people that take it to the absolute extreme. In my opinion, if you could even just buy, like, I was holding dividend stocks like RioCan in my regular brokerage account, and I was actually using the dividends to pay for crap because I already had my tax advantage accounts maxed out. So I was actually just kind of even utilizing some of the dividends at some points, or even using them. Or what you could do as well, and this is another thing that is a good example, is if you're collecting a lot of dividends, what you could do is just, pay them to your RRSP every year. Like my fiance, for example, she's going to have to transfer because we bought some real estate. She also sold some stocks out of her TFSA. She had a lot of stocks in a regular brokerage account, and we're trying to figure out how to sell them and transfer them to her TFSA, but she's going to have to pay capital gains, which sucks. So how do we avoid the capital gains? Well, we're going to try. She's got a decent amount of contribution room to her RRSP. So we'll take all the capital gains, try and avoid paying any tax on them whatsoever, and just put in the RRSP. So if you don't really like make any extra income over your regular salary, hey, just take the dividends, put them in your RRSP, and then you pay zero tax on them as well. There's a lot of good loopholes and stuff you could play around with. It gets kind of crazy. Heck yes, I'm trying to optimize the tax position, hate paying taxes. I do agree on that statement, but unfortunately you do got to pay the taxes because it's the only way you can get ahead in this world. I'm like, you want to buy real estate, man. See, that's my problem, is when I worked for myself, I didn't want to pay any taxes either. And I thought I'd be a genius and I'd put all of my money into a corporation and try and pay myself as little as I needed to live on as possible. But guess what? When you go to buy real estate, the government and the banks look at your income and say, hey, you made like 20 grand this year. You can't afford real estate. And I'm like, no, I made over 100 grand this year. It's in my corporation. Well, guess what? That corporation is a third party entity. That has nothing to do with you. We can't trust that because it's a company. It's not you. Your company could buy real estate, but we can't sell it to you. I'm like, oh my God, what a headache it was. My fiance made so much fun of me because holy crap, the paperwork that I filled out. Imagine having like $500,000 and the bank will still not give you a freaking loan to buy a freaking house, or condo. It was so bad. It took me like months of paperwork. It was terrible. Even up to the last day of us getting that mortgage, literally the last day, they said, do you guys even have 10% of the value of this property and assets? And we're like, you understand that we and again, I'm not trying to be greedy and I'm not trying to be cocky about this. We have more in assets than the value of the property we're buying. It's like, why are you making this so damn difficult? I guess it's good. It also shows the stability of the Canadian banks. I'm also trying to buy a condo. Good luck. It is not as easy as it used to be, and I don't think it matters how rich you are anymore. The banks are just very tight. They're making sure they're not handing out bad loans. Yep, banks like T4s, even if I make more money on my investments, I literally had to give them, I can't even express to you the paperwork that I had to give to them. I had to get my current employment to give me a letter of employment because they only started paying me a salary this year. So I don't even have 2 years of full employment, even though I've worked for the company for more than 2 years. It's like such a headache. And my fiance, she has a degree. She has a salary position. She has everything the bank loves, a long-term employment trajectory, a great degree. They ask for 2 pieces of paperwork. 2 T4s. What are your last 2 T4s and pay slips? Boom, done. I spent like a month just giving them endless amounts of paperwork and signatures from all the different people I work with. And like, amen. I'm in the GTA. They know they're trapped in the matrix with the T4. Yeah, the T4 matrix. That's what you need. That's what I'm saying, man. You want to be tax efficient, but the banks really want to see you paying your taxes because that's the only way you're going to show income. Yeah, easier to underwrite. Anyways, folks, outside of that, I hope you guys are excited for a continued bull market. And if there's one reason I know the bull market isn't over, crypto every single weekend. It doesn't matter what's going on. People must be bored and they want to gamble because Bitcoin is flying, baby. I should do an update on our Bitcoin wallet. I don't even know what it's worth. I haven't looked at it, but it's definitely going up because we only own Bitcoin and Ethereum. And I've been using crypto as the gauge to the future of the stock market. Forget the fear and greed index. I think crypto right now is the defining factor to people's risk on. And it is risk on, baby. Every weekend, crypto goes up. The following week, the stock market goes higher. So yeah, it looks like we're going to get a Christmas rally, hopefully into the end of the year. We'll see what exactly happens. But, I'm going to maintain my bullish thesis on most dividend stocks because they're trading at discounted values and don't stop buying because of market conditions. And we'll just pray to God that things level off a bit here so I can still keep buying because we only get rich when the market's down like it is now to some extent. But I appreciate that you love the channel and the lives. Keep it up. I hope you guys enjoy the live streams because I almost feel like I should cut them down into the segments because I jam so much in here and I feel like a lot of people might not be watching these because they're so much longer. And I think there's a lot of fun topics and I love putting them together. Keep in mind, it takes me a good hour to put these streams together. I don't just come up with this overnight, by the way. It takes me a bit. But nonetheless, I do appreciate you all stopping in. Hope you have a wonderful Sunday, folks. And I look forward to catching you next week. So stay cool, stay awesome. Peace. I'm out.